let's jump in and see what's going on out there. Here's the spider. We are basically hanging out in the vicinity of that blue line. That just represents the former lifetime high here, which we beat on Friday on an intraday basis, and now we're just kind of hanging out as an inside day right now. So boring. Here's the diamond, and it's doing the same shtick. It had an intraday lifetime high on Friday, and it's just kind of hanging out in the middle where it was on Friday. Very, very little activity. The semiconductor index is up, and this was the lifetime high here. So thus far, we've got a lifetime high, a lower high, and a lower high. So it's the most modest of downtrends over the past few weeks. Now, with all the boredom going on in equities, not so with precious metals. We're still getting some action there. At the moment, gold is up $21.50 an ounce, another lifetime high. Just to review here, this is basically this millennium of gold. We had a steady bull market in gold for the longest time, and that ended in 2011. And then it began to do poorly. Now, as of right here, it looked like gold was just a dog because it had lost a whole bunch of those gains. But now we can look in retrospect and see it was building this beautiful base. That base took a long time. It started hammering out in 2011 and didn't complete until not even a year ago. Actually, it was early last year, excuse me. So we had this huge cup with handle pattern, and it was totally complete in February of last year. And that's when gold was around 2,000 an ounce, which at the time seemed really good and really high. Little did we know it was about to double from then. So after the completion of that cup with handle, we have gone up almost another 100%. And most recently, we had this right triangle pattern, which was hammered out between April 22 and about 4 months later, late August. 4-month period to hammer this out, and then whoosh, up that goes. So yeah, gold's doing exceptionally well. Silver also up. I will point out the lifetime high was here. We beat it a little bit in 2011, and we've matched those prices here. So if that means anything at all, who knows? Knock it off, Duke. But we'll see. I suspect silver's in for a little bit of a cool down after this run up. Palladium is having a good day today. It's up $26.10, 2.31%. As I've said ad nauseum, I think it's got a great future. I think the months and even years ahead are going to be very good for Palladium. I think percentage-wise, it's going to beat things like gold and silver. But it's much thinner, much more squirrely. I'm out of it at the moment. Maybe I'll regret that, maybe I won't. What I'm hoping for, and hope is not a great strategy, I realize, but we're going to see if it happens, is for gold to have some sort of ease back, and that'll really knock Palladium down and we'll get back in again. But it's a little silly, I guess, to fine-tune it like that because it's a terrific looking pattern. As far as the ETFs themselves, here's GLD, which naturally is at another lifetime high. Like so, this was the resistance for a while, and it after August was over, it never looked back. It's just gone bouncing higher. Best hope I'm looking for is an ease back to that gap, and we'll see if it happens or not. I might not get a chance. Gold has a tremendous long-term run. Sorry. Fizz, which is also gold, but just a different provider, a different financial instrument, Sprott Physical Gold Trust, is also up to a lifetime high, and it's doing well, obviously, also. SLV, silver, this was the target, which we have met nicely, and we are exceeding it a little bit. By the way, how is the target calculated? Very simple. I took this low and this resistance level, in other words, this entire pattern, and so this is just classic measured move. This is the spread between those two, and the idea is that represents kind of the pent-up energy of the pattern. So basically, you take that value and add it to the top of the pattern, and you get your target. And that's what our target was right there, 37.64, and we're there. we're there, and by a few pennies exceeded it. So another victory for technical analysis. Thank you, Edwards and McGee. Couple others. Here's OUNZ, OUNZ, which is another financial instrument. It's a concoction of gold and silver, both of which are doing well, and naturally, so OUNZ is doing well too. Lifetime high. The miners are also up. No surprise. Lifetime high. It doesn't bother me much to say those words lifetime high when it comes to precious metals. It's a good thing. So this continues to soar higher. But as I said, Palladium kind of holding back on. Maybe it's a mistake. Maybe I should just jump in, cover my eyes, and forget about it. But we'll see on that. I will emphasize again, I think long term, it's just terrific looking. Over in energy land, while we're on the topic of commodities, that's weaker. This is XOP, and this has been sinking subtly for the past few days. 4 days in a row, we've been kind of easing back like so. I'm not an XOP, and I'm not an XLE or USO. I only have a couple of energy-related shorts, and those are doing nicely. One is COP, ConocoPhillips, COP. And there's the topping pattern on it, kind of sloppy, although not as sloppy as XOP. And this has been sinking for the past few days as well. It's another nice drop on this today, 2.3%. And you can see historically here how this has a tendency to top and drop. 1, 2, 3, and now 4 instances of doing so. The other item is Oxy, OXY, Occidental Petroleum. Down not quite as much. It doesn't tend to be as volatile as COP. And zooming in here, this is the stop level, and a nice tumble today. So hanging on to those. I think crude oil could be in for some continued weakness. As far as some other short setups, and these aren't necessarily down today, but I do like these patterns just to thumb through them. Here's Abercrombie and Fitch, ANF, and same idea. We've got this history, this personality defect of topping and dropping. And so we seem to be doing that now. Tighten up the stop like so. Dollar General, DG, is off almost 1%. I'm kind of sad not to be in DLTR anymore because it keeps weakening. Of the two, DG and DLTR, it seems DLTR is the better short. Unfortunately, I'm in this one, but it's still going down. On semiconductor, ON, this is off about 1.2%. So slipping lower, like even with the SMH up, on is diminishing in value. Here's one we don't talk about hardly at all, Vistra, VST. This down about 0.5%. It's a younger stock. It's had 3 instances now of these topping reversals. And we're making progress. I've got a nice tight stop where that dashed line is. And what we want to see is a failure of this support level. I'll just mark that in green to make it a little more obvious what that's all about. So that is our support level, which was basically Friday's low, and we want to see that broken. Our old friend Cracker Barrel continues to do well, CBRL. This was a good opportunity with all the culture wars and the craziness about the logo. I shorted it during the midst of all we changed it back, sorry, and everybody's yay, and buying back into it. I think that the kerfuffle over the logo is ancient history now. Now it's replaced by the woman stealing the ball in the Phillies game. So Cracker Barrel seems like ancient history. And so this is resuming what had been a multi-year scallop down with, top and drop, top and drop, top and drop, etc. And one last item over in the short portfolio, which is down today to Global Payments, GPN. I think I mentioned this for the first time on Friday. And this one's down, as I say, about 1%. Principally because of that pattern I've highlighted right there, this very pretty head and shoulders pattern, the red dashed line representing the neckline, and also the stop loss level. So bonds keep getting stronger. Next week, I believe, on Wednesday. Is that true? Let me just peek. Yeah, it looks that way. Next week on Wednesday is the almost certain 25 or 50 basis point drop, as the economy and the jobs market seems to be doing badly enough for Powell to want to drop rates. So TLT is anticipating that. It has had a big, strong lift on well, Thursday, well, actually Wednesday, Thursday, Friday, today, big power push higher. Corporate bonds, which we hardly ever look at, LQD, also doing well, as you can see. And our old friend IEF, which is not as up percentage-wise today as much as TLT, but I like it a lot better as a pattern. It's a cleaner pattern. TLT is just kind of like, it's undoing some of its years and years of losses. IEF looks like an honest-to-goodness, real, legitimate, classic bullish pattern. So I think it looks cleaner and sharper, and it is a much more manageable trade because it's got a very obvious stop-loss level than the likes of TLT, which seems to be a bit of a runaway train right now. But I'm going to hit on the theme I hit upon so often. It's kind of our North Star, as they say, our guiding light, which is in some form or another, take any precious metal and any equity and divide the first by the second, and you're going to get a bullish-looking graph. Or you can flip them, equity divided by precious, and you'll get a bearish-looking graph. That is to say, the ultimate pair trade, I think, is some form of being long precious metals, which has worked. It's not just, this is not maybe it'll work one day. It's worked for a while now. Gold is beating the pants off of equities this year. This particular one I chose is GC, the long-term continuous contract of gold, divided by just the spider. Plain old boring SPY. And as you can tell, after a dreadful time for years and years and years and years, it has finally formed a nice base, burst higher, did a nice clean retrace, did a yeoman's job of finding support, and now finding that strength again. So I think we've got a full, complete reversal on this for the long haul.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.